Well, good morning, my friend. My name is Augustine Chow. You've seen me many times over the videos. Well, have you noticed that following the Joe Biden becomes the president of America and the vaccine taking has been widely spreading out over the world, there has been a great change in the investment atmosphere in the market. We observed that during the past few months, there is a dramatic blooming of the investment funds and giving a very high yield and return. And this morning, I'm going to discuss whether or not this is the best time for fund investment. Let me share the screens to you. Yes, is it a time for fund management? Well, you have to look at several factors. In fact, we will discuss in this video, is it the right time for unit trust fund investment? And what are the options for those high, medium, low risk takers? And how can they invest? And what portfolio could be considered? And what is the next step? Well, there are many factors affecting the fund performance in over the world. I would like to mention a few political economic factors, and then the market situation and the expectations by the investors right now. And then we would talk about some fund performance around the globe. Political economic factors. Well, the first thing is about um, the American financial policy that they try to revive the market by lowering the interest rate and printing of more currencies for America notes. And this currency has been made American dollars very affluent, and then they outflow from America to the Asian market, and primarily for the investment in the newly listed public stocks in China and through Hong Kong. And you would observe there is a rebound of the economy recovery in the Asian market, particularly in China, where they registered a 2.2% increase in the GDP last year. And this year, they are expecting a 6% recovery. And with lots of new stocks being listed in Hong Kong or returning from the New York stock market, it attracts a lot of the hot money coming in. And don't forget, China has signed the RCEP economic treaties with the Asian countries, now giving Asia a free trade zone. And that is expected to be providing good environment for the trade and the investment to bloom in in the Asian market. And not only that, just one day before the Brexit, China has also signed the three investment and trade agreement with the EU, European Union. And so the investments, the trade, I think two factors has been settled with great opportunities for China and then for the Asia Pacific. So you see that Asia Pacific, the technology rebounds, the application of artificial intelligence, the big data, and the new technology market has been blooming and merging in China, in the Asian Pacific market. And China is the second world largest economy right now. It is boosting his own consumer expenditures, consumer spendings, which is self-sufficient for generating economic growth for the China and for the Asian market. Well, amongst the 200 investment funds, unit trust funds that's available from AIA, many of them, I think most 50% of them are registering a double digit return. Well, one of them I noticed has been reporting a year to date return of over almost 200%. That is 200%. Well, that is a tremendous surprise to a lot of people. Well, of course, if you have a lot of money and you know how to invest in stocks and you have the time to monitor it through the monitors every day, of course you can invest in your own stocks or bonds or derivative market and make your money there. But for a lot of us who do not have the time or knowledge, but we want to have professional advice investment, and through our small amount of money, And we can achieve the same benefits by investing in unit trust funds, and that is managed by professional investors, professional fund managers, and can achieve a diversified portfolio investing in different regions and different types of investment instruments. I think that is the advantages of investing in unit trust. And don't forget, you are already a unit trust investor. Your money in your MPF account, have you ever managed it? And have you have you applied the average cost method to diversify to your entry points, to keep a continuous entry point into the fund market so that no matter the market is up and the market is down, you can achieve the average cost of your investment portfolio? Well, to many of you, well, these are the factors that I would like to mention. And yes, the technology, the vaccine, the market, the fund performance right now across all the regions, specifically in the Asia Pacific, the stock market, the bond market, interest rates been low, the precious metal, energy market, new business market, right, all are reporting tremendous good return to us. So there are three ways to invest in funds. One is a long-term average costing method that I mentioned. When it's rising, when it's falling, don't ignore it because you'll be achieving a long-term investment average cost, lower your average cost. Or you can construct your own portfolio, given a medium term like 2, 3 years, and have your portfolio to realize the economic growth and the fund management objectives. Of course, if you have a large sum of money, lots of pre-retirement fund, you want them to spend it away for 5, 10 years, you can do that by making a short-term hit and run type of investment into a particular selection of funds that will help you to achieve your investment goals. To many of us, we have high or medium and no risk profile, which we can test by attending a survey or some sort of questionnaire to test how your risk appetite is, and how much risk you can take, and what is the tolerance of your investment yield rising by 20%, 30%, 50%, and how will it affect your daily life. And you can take this test and assess your risk appetite. And after you have received that, let's say you are a high risk taker and you can afford ups and down up to 40, 50% of your investment portfolio, or your medium risk or low risk, then there are several different types of funds you can select. One suggestions is that if you are a high risk taker, just put all your money into the stock market. You can select American stocks, Asian stocks, China stocks, even Hong Kong stocks, and achieve a portfolio, a diversified stock market. So no matter the market rise in EU, in New York, in London Stock Exchange, in Hong Kong Stock Exchange, or the China market, you can realize the capital gain there. Or if you're a low risk taker, very conservative, and because this is your retirement income and you are coming to an older age now and you don't want to take any risk, of course you can investment in currency funds, bond funds, government bond funds, which provide very low risk, and you can achieve a 2, 3% return for your money and generate sufficient income for your daily life. But for most of us, we are either in between a high or medium or low risk taker. Then you might want to adopt a portfolio approach. For example, a high risk taker may construct his portfolio by 75% in stocks and 25% in bonds just to balance the risk. And the medium risk taker, probably a 40-60 split. And for the low risk, you would rely on recurring income, fixed income assets, fixed income bond portfolio, and maybe enhance the yield a little bit by investing up to 40% into stocks. Well, these are some examples, some portfolio construction depending on your risk profile, which you can get the results by attending a questionnaire. And of course, I can help you with that. To give you an example of what a high risk portfolio would look like, a 20 80 spread in fixed income and equity. AIA has an intelligent fund selection software, which is based on the fund performance, risk profile, and the large data, big data analysis to give you some suggestions. For example, here we find that for this high risk person who achieved a score of risk appetite of risk level of 36 points out of 40, 50 points scale, yes, 50, 90-point scale, then he can take higher risk and balance it from some medium and low risk investment. For the high risk uh, uh, portfolio, and then it is suggested here we that he takes NO7, Morgan Stanley Investment Fund, Global Opportunity Funds, which investment global opportunities. Right now, it is returning a 54% year to date. And over the last 5 years, there is very stable. There is no registered losses during the 1, 3, and 5 years, which is quite strong in global opportunities managed by Morgan Stanley. And the second, they suggested allocated 11% of that is the Schroders, a very famous brand. Schroders International, again, is global emerging market. And for emerging market, it is higher risk, but the performance is quite stable. For the last 6 months, 36%, 21%, and 93% over a 5 year period, which is not bad at all. If you can you can invest for 5 years and wait for this fund to manage to realize its investment objective, you will register 93% growth in 5 years, double, almost double. Another fund is the Pine Bridge Global Fund. Again, it is a global funds excluding the Japanese equity market. And the fund performance quite stable, 34% up to 91%. So in stock market, you can achieve that almost double up your investment in 5 years and balance it with some medium risk funds like a Pine Bridge Asia Fund. Again, is stock fund, invest in A-grade stocks, equity funds. And right now, this registering at 23%, quite stable over these last 6 months, and also not as high risk as the previous one, but it will also give you a 74% return. Another medium term is the CG Capitals, Capital Investment International Funds. The CG fund, CG1, is new perspective funds, including investing in, it is based in Luxembourg, a grade B type of equities, and then it's registered 32%, and in 5 years, doubled. And during the 6 months, this is quite stable because for the new perspective fund, it will take longer period to realize its capital gain. And balance with the low risk fund, 21%, one third of them in fixed income. And this is the Lag Mason Global Fund, which is the Western Asset Asian Opportunity Fund. Again, is an investment in Class A fixed income bonds. And right now, the 7%, because it's low risk, of course, it's not bad at all, 7%. And over 5 years period is increased by 29%. So balance it with a low risk factor fund. Then this is a highly, I think, uh, mature portfolio with high, medium, and low risk in the baskets to help you to diversified into equity, diversified into new perspectives, business, emerging markets, and also um, Asian bonds. I think it's quite diversified. For example, let's look at the medium risk with a 34% score, that's in the middle range. The AIA Intelligence Fund Selection Selector suggested a 36% in fixed income and 64% in equity. So let's see what equities is recommending. It's not the highest risk in stocks, but the PineBridge Asian Equity Fund is investing in Asia equities, excluding Japanese small cap equities. They are recommending a 35% into this fund, which is making 23%, 22% over the last 6 years, and 74%. And it's quite stable. And you measure the risk by the fund prices over the same period of time, you see it's quite stable. So the risk factor is medium because it's an equity. And the other one is the New Perspective Fund. Again, we mentioned it, 29%, which 50%, almost of about 54% are in this medium term um, equities, and which will give you a higher yield. And for the balance it for the lower risk fixed income funds, we have again the Lag Maxon Western Asset Opportunity Funds right now 70% return, Morgan Stanley Investment Fund Global Bond Class A, which is very stable. Um, 10%, and over a 5 year period, 28%. And this Neuberger Berman Investment Fund invests in market debt, hard currency fund, which is a currency fund, which is very just in terms of diversified portfolio of foreign currencies, which will give you about 5% return right now, but very stable. There's virtually no capital loss opportunities, and they suggested to balance the portfolio 10% into this fund. Right now, this is selling us about $14.50. And then, well, over the 5 year period, there's also achieving a quite reasonable return, 41%. And in the past, because of currency strong, I mean, US dollars can be strong, can be weak. And then we saw that the Australian dollars, New Zealand dollars, and even the British pounds, the um, renminbi has been quite strong in recently, which give you a good return against your US dollar investment. Now let's look at the low risk factors. Low risk person, which achieve a 20 score out of a 50%, a 50 score investment risk appetite scale. And you find that the EIA recommend all the low risk funds, there are many of them. Um, Lexon, Leg Mason, Western Opportunities, Fidelity is a very famous brand. It's been used for in Hong Kong for over 30, 40 years. 70% into it, and which is now yielding a 12% return. And over 5 period, 30% is not bad at all. Morgan Stanley, we mentioned that. Neuberger Berman Investment Fund, emerging funds, hard currency funds, another 10%, which is the floor for to protect your capital. And then this Janus Henderson Capital Fund, it is a balance fund class A2 multi-assets, meaning that they can choose between bonds, stocks, and other things, currencies, and you can give him the authority. So 40% in that was quite heavy. And see what they are providing, yielding at 12.6%, which is above inflation, about your money in the bank account, of course. In 5 years, you achieve 60.6% in return, and very comparable to this your investment in stocks. So these are quite strong. Low risk portfolio give you a very stable and under stress, and then you will make a decent return. Let's say if you buy this portfolio, you're probably making 8 or 9% return in your portfolio, which is not bad at all. So then what do you need to do? Then first of all, you must assess how much money you can afford to invest. Then out of your current assets, meaning current assets, which is cash-like assets, take about 6 to 9 months of your monthly family expenditure as an emergency reserve fund, and don't touch it. This will be your cash cushion for your emergencies. Then allocate your funds into two portions, things that you can invest long term for a particular objective, or things funds that you can make short term investments. Everyone in different ages and different cycles have different needs. So that's why you need a financial planner, advisors to help you to analyze your current situations and to see how much money you can afford and what are the specific investment objectives for that money. For example, are you investing for just to build up the capital to buy a flat? Are you investing to to provide a reserve for retirement, or are you building up an asset over a 15, 20 years period for your education funds for your children? So make very specific investment objectives and then allocate your funds into it. Then um, you can be very clear about your short-term, medium-term investment money and the risk level that you can accept for each one of them. Then after these financial situation analysis, you set your investment goals, and you set your investment funds, the size of the fund, and then the period of the investment. And after you have this, and you're pretty sure, the next step is just how to allocate your money into the fund market, and which a financial planner or some intelligence um, portfolio monitoring advisors can help you. I'm Dr. Augustine Chow. I've been in financial services for over 40 years, and I'm happy to assist any of you to assess your own current risk level and allocate your investable funds into any of the unit trusts. AIA does provide a very comprehensive unit funds portfolio managed by the different professional investment fund managers. And what you need to do is make a call to me. My telephone number is Hong Kong number 852 9123 4196. 9123 4196. Or you can email me or go to my website. Click on the website, ask for a quote. My website is The Chosen Race, THECHOSERACE. And and I also suggest you subscribe to my YouTube channel, which I will share with you and more of my understanding and perspective about the investment, about your protection needs. The, my YouTube channel is AIA Chosen Race, AIACHOSENRACE. And I look forward to meeting all of you. And then let's build a relationship, and let me help you for your protection and for your investment needs. I'm Augustine Chow, and see you in the future. See you next time. Bye.